Today's problem will be number 17, and it will again involve a sales journal. You've used the sales journal a couple of times now. This time you'll be posting to not only the general ledger but also the subsidiary ledger. One of the subsidiary ledgers called the accounts receivable ledger. The posting is very similar to what you've done in the past, but I thought a quick demonstration might be helpful. So let's take a look at the ABC Furniture Store on the screen. You've had this journal before, I believe. One difference that I want to point out before we get into the posting is the page number up at the top. Page SJ15 stands for, obviously, Sales Journal 15. We will end up having 3 or 4 different multi-column journals, and if they're all page 15, it would be a bit confusing. So typically, SJ would be used to designate this journal. And we'll see a different procedures used for the other journals that we'll come to in the next few weeks. So at the end of the day, as I mentioned earlier in a video, I believe, typically a larger store will be posting every day. So at the end of January 8th, we have just 3 to post, but it's done on a daily basis. So let's take a look at the procedure. First of all, let's post at the end of the day the totals to the general ledger. And the general ledger would involve these accounts: accounts receivable, sales, and sales tax payable. So we don't worry about the individual amounts, but we do post the totals. So at the bottom, 414.02 will be posted to the accounts receivable on the debit side. And again, we're making sales on account, which means people are charging things. They owe us more money. That becomes an asset. Accounts receivable is an asset account. Increases are shown on the debit side. That's why this column is called accounts receivable debit. So let's go to the general ledger, find accounts receivable, and put the date, January 8th, 2020. And this came from, Sales Journal 15, and it was a debit, 414.02. So nothing really, I did that wrong. 414.02. And the balance obviously increases. It's accounts 102, and back into the sales journal, we put the account number. So very simple there. Sales is credited, it increases. We go to the revenue section, and we find sales, and we put the date, as we always do. Posting reference, and the credit. I better check the credit to get it right. $391.50. And the account number is 401. And we go to the liability section and credit sales tax payable. We have, or will collect from when they pay us, we will collect from the customers $22.52 for their sales tax. We collect it from them. We will pay it later, so it becomes a liability for us. Sales tax payable. And it is credited by the amount in the sales journal, $22.52. And that number is account number 205. So only the total needs to be posted. We can't forget to do the totals, however. So at the end of every day, this would be done in this particular business. Now, the only thing new would be posting to the customers' accounts. That's where we use this posting reference column. So Sally Armstrong charged something, and whatever is shown in accounts receivable debit would also be debited to her account. So we go to the accounts receivable ledger now. We find that Sally Armstrong has an account with us, and she already owes us money, as you can see. We're adding to it now. And the posting is done same as it always is done in the general ledger. And the amount that she owes us is not the sale amount, it's the total amount including sales tax. She will have to pay us the sales amount plus the sales tax, $116.33. The account number is typically done this way. Accounts receivable was account 102, so accounts receivable ledger has accounts beginning with 102 and then 0.1, 0.2, and so on. So that's how it would be done. We go to James Morgan, 5975. So now he owes us an amount of money. Eventually, when they pay us, when the customers pay us, obviously their account would be credited. When James Morgan pays us $59.75, whatever that is, we would credit his account by that amount of money, and that would mean a balance of zero. We're not ready for that yet. That's using a different journal. So his account number is 102.2. And then Pat Phillips, same way. And the total amount that Pat owes us is $237.94. So we can see at a glance how much money customers owe to us. And once again, as I said in a previous video, this is a company that sets up its own charge accounts with its customers. So these are not credit card sales. These are charged directly to the account in the ABC Furniture Store company. So we have to not only record all this, keep track of all these customers, and there could be many more, but eventually we have to collect from them as well. There are advantages and there are disadvantages to this, but this is how it's set up for the ABC Furniture Store. So that's how posting is done. One other point that is important, if we want to double check things, the balance in the accounts receivable account in the general ledger, this balance ought to equal the total of all the customers' accounts. If we add up all these numbers, not only what Sally owed us at the beginning as of 12/15/19, but her final balance, James Morgan's balance, and Pat Phillips' balance, all those customers' accounts ought to add up to the balance in the general ledger account. This will show us how much people owe us in total. The accounts receivable ledger will show us how much individual people owe to us. Later on, we'll see how this shows up on financial statements. So that's the procedure. Make sure that you post the totals to the general ledger accounts and then post the individual amounts to the customers' accounts in the accounts receivable subsidiary ledger. At this point then, let's go to problem 17 and do some posting in that problem.